Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined by Nicole Dines and Dan Innes to highlight the key stories from the past 7 days. Nicole, what's caught your eye this week?
I thought it was interesting. The Life Sciences REIT announced this week that it had successfully completed its IPO. It had announced in October its intention to raise about £300 million and list on AIM, the alternative investment market on the London Stock Exchange. But as it happened, the demand was such, it was oversubscribed. So it actually raised 350 and then had to stop because there was the maximum level that was allowed. So it just shows the level of interest in the sector, in the life sciences sector, which is fast growing. And it's also marks, it's the biggest IPO of a REIT in London since 2016. So it also shows a pickup in demand in the more general real estate sector. Investors will have exposure to a diversified portfolio of assets across the UK, but it's with a particular focus on what they call the Golden Triangle, which is Cambridge, Oxford, and there around St Pancras in London, where most of the labs are. So they already have a big portfolio of assets, but they're looking for more in that area, betting, as I said, on the growth of the sector. Another couple of interesting stories that I saw were, quite an Italian company investing in London and a British company investing in Italy. Generali Real Estate, which is the property arm of Italy's biggest insurance company, has gone back to investing in London. It had last invested in the city in 2019, investing in Fenchurch Street, and now it has just completed the acquisition of Times Square, which is a big office building in Queen Victoria Street, which it bought from Blackstone for a reported 465 million. There was a fierce bidding war for the asset, but Generali offered the most. It just completed this purchase, but it's also said that it wants to invest up to 2.5 billion more this year in London and other European capital cities, with a particular focus on London offices and logistics and residential. It marks obviously a big shift after this pause, which was caused by uncertainty over Brexit and the pandemic, of course. So it signals a return to investing in the UK capital, and Generali is very bullish about the outlook and the demand in the UK. And M&G Investments, which has already a strong presence in Italy, is investing another 65 million euros to expand a retail park, which it already owns outside Rome, to sort of almost double the space. And it's called Market Central Da Vinci. It's not far from Rome Airport. And the interesting thing about this is obviously it signals a belief in bricks and mortar retail, despite obviously all the uncertainty over the sector during the pandemic. And then M&G Real Estate said that what really works is retail parks like that one, because it's open air and very diversified, and people feel very safe shopping there, as well as having the range of shops to choose from and the experience, easy to get to. But mainly it's open air, so they feel safe. So they're going to invest more in that sector.
Yeah, in terms of London, the move, obviously, of the Shell HQ from Holland to London, perhaps another indication of that positive sentiment. I also saw Derwent London Chief Executive Paul Williams kind of hailing the return of workers to the city's offices and restaurants, and also data revealing footfall and flexible workspace usage in the capital, heading back towards kind of pre-pandemic levels. Also, Patrizia launching a 1 billion London-focused urban logistics platform. Lots of kind of positive sentiment there in terms of London, it seems. Dan, what have you been following?
Yeah, well, it's been a week of results for some of the UK's largest REITs. LandSec, who are, of course, they're 50% owners of Blue Water. Their biggest headline from those results is that it's making a pre-tax profit for the first time, with its first rise in its values for 5 years, rising £81 million or 0.8%, up to £11 billion in the 6 months to the 30th of September. They made a pre-tax profit of 275 million in the first half, and that was compared to 835 million loss a year earlier. So a real positive step. And that's come in a first half that's seen them selling off about £250 million worth of assets, and also making about £616 million of acquisitions in the first half. You've probably seen them across the headlines for the last few weeks of November. And that's including acquiring the 75% stake in Media City, and that's the 15-hectare media digital tech hub in Salford, Manchester, which used to be that 50-50 JV between Legal and General and Peel. It's where the BBC is headquartered now. And of course, they're also taking over the urban regeneration specialist U&I for £190 million. So November's been an incredibly busy month for LandSec. Their portfolio is 70% made up of central London property, mostly offices like Deutsche Bank's London headquarters and one new change, the retail on ground offices above, right next door to St Paul's Cathedral. But of course, it includes things like Piccadilly Lights, which will have that huge refurb not that long ago, and other assets like Trinity Leeds and White Rose Shopping Centre on the outskirts of Leeds. But it's really thanking the reopening of retail and the revival in office working for those improved figures. Another company that's showing improved figures, British Land, and they've reported a rise in net asset value for the first time since 2018, mainly thanks to its investment into retail parks. The landlord's net asset value per share rose 5.1% to £6.81 in the 6 months to the end of September. And they were buying retail parks worth nearly £300 million in that period, including sites in Farnborough, Hampshire, and in Thurrock in Essex. But, retail parks, typically those out of town locations with the bigger floor plates than average, they took a bit of a hit during the pandemic, but British Land, or BL as people affectionately calls them, they favoured them as their units were cheaper for retailers to rent on the whole, and they tended to work better for click and collect as well, and for last mile delivery hubs. And we all saw the way they outperformed during the pandemic. So, the location is really the critical element, where they're close to main roads, and therefore they've got the potential for alternative uses, things like warehousing, for example. And then lastly, as we sit here today, it's really only a week until Mapic, the world's leading retail and leisure event, and it's down in Cannes for the first time in 2 years. Obviously, last year's was cancelled, and this year's actually going to have quite a large delegation coming from the UK. There will be a UK expansion hub to support UK delegates making the journey down to Cannes, with over 300 currently registered for the UK pavilion. But for the whole event, really, I think now delegates are looking like being about 3,500 to 4,000. Richard, something like that. For the first time, Mapic's going to incorporate leisure up and the Happetite under one ticket, which is all great news, I think. Those markets are all merging very, very quickly, and lines are blurred. So we're looking forward to seeing those new occupiers who are really changing the face of retail and sort of hosting a variety of other dedicated conference sessions. Excited to be back down in Cannes.
Yeah, it's interesting. We had an interview in the upcoming issue of Real Asset Insight that'll be at Mapic with John Jove, co-CEO of MacArthurGlen, talking about exactly the way, outlet centres have adapted over the past 20 months, including that sort of click and collect side and embracing the multi-channel sides of things. And also that they'd, got a very positive outlook for the sector there. Also interesting to see, given that we're, not long past COP26, that the Swiss pension funds almost tripled assets invested to cut CO2 emissions. And I think that's a really significant area in terms of what the pension funds are doing and the influence that will have, particularly on the built environment. I noticed as well that INREV had recently released a new paper on the impact of net zero carbon, just outlining the kind of current landscape, but also how to execute the targets effectively. So interesting just to see how these things are really beginning to work their way through in terms of the real estate and real asset industries. Thanks very much, Dan and Nicole. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the week in the real asset markets.